Hello, YouTube. The Bulls remain in full control, and as we know, there ain't no party like a bull party. But with where we sit right now, as we're about to close the month out, there is a 90% chance we're going to go higher into the next 1 year. It happened 9 out of 10 times. So unless it's 2000, like we talked about on the weekend, we're probably going to be, again, here's the average numbers. 1 year out, plus 16%. 3 years out, plus 27%. And then 5 years out, plus 59%. Plus 10 years out, 206% respectively. What does this mean? Well, what it really means is that there ain't no party like a bull party. And we want to go back to that Warren Buffett quote we've been talking about, and you're probably going to get tired of hearing about it. Why? Because we're going to keep talking about it as we're set to close a month out. Please be patient. Why? Man, these are huge numbers. It's okay to be wrong, but it's not okay to stay wrong. And right now, there are people who are ready, willing, and able to be wrong. What I'm talking about are short sellers. I don't know what the hell they think they're doing, where we go higher and higher into blue sky territory and they keep shorting it more and more. This does not make sense, but that's okay. They're impatient. If we're patient, we're going to steal their money, and I'm happy to take it. So when we look to the heat map for today, we're seeing that there's a little bit more participation, notably Tesla up by 4.2%. Elon would be proud. NVIDIA pumping. Let's look at year to date. There's Mr. Green. He's almost everywhere. We're only about to close out the first month, but wow, NVIDIA, 26%. Microsoft, 9%. That's hundreds of billions of dollars. Same thing for Google and Meta. And as we talked about, there's a really big week this week. The market has been greedy for a year, a month, a week, yesterday, today. Okay, so we're pretty greedy. Yeah, we are. Why? Hey, well, people want to make money. And the odds are that we're going to be higher by quite a bit going into, again, that's pretty good. That's pretty good returns if we just look at the numbers. So what I really want to remind you is that Jerome is likely not going to give us very much commentary on January. What he's likely going to do is provide forward guidance, which is the exact same thing the stock market does when it goes into earnings like Tesla. So we want to think about whether or not we have run into earnings. Yes, we have, but we got to zoom out a little bit more because this tightening cycle from the Fed really started over here. So where do we go? Well, we're basically back to where we started. So we're basically back to flat. However, inflation's gone up a lot. So the market's not actually in new all-time highs when we account for inflation. So what does this mean? Because you're saying a lot of words, but on the weekend, you give us a very clear story. So let's go back and review that. But just before we do, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would personally appreciate it. Thank you so much ahead of time. You guys have been such a great audience. All right, so here we go. The only number that matters is what? It's 480. That's going to mean that we're green on the year in a blue sky territory, and we're going up. All right, that's easy. So there's likely to be lots of noise out there. We've already got quite a bit of noise from news so far this week. Economic data, yep, it's going to come in hot and heavy, notably on Wednesday. Tomorrow, we got Microsoft, AMD, and Google reporting earnings. What does that mean? It is best to focus on levels into the end of January. We're solidly in bull market territory. And as we noted here, we are over 480. Do we hold it? And then we are likely to be over 490. Man, that happened pretty fast. I stepped out from my... from home for like, I don't know, like an hour and a bit. I come back and I'm like, oh my God, what happened? Well, we went higher. We went a lot higher and the bulls continue to march. Look at the nice bullish volume here on the 15-minute chart. It looks good. It looks thick. Looks like we can go higher. So now that we're over 490, will we hold it? And we talked about that 466 area as the January low. So we're going to ratchet up support. And if that area holds, then we got our monthly higher low pattern. Again, let's make this so simple you can't ignore it. When we look here, the pattern we've been talking about is higher lows and higher highs into the new year. If you want to follow me on Twitter, I do have the stuff pinned to the very top of my profile. We're basically comparing 2020 to 2023. And as long as we keep forming higher lows and higher highs until we don't, well, this is a 50% rally from right here. If we repeat that exact same thing, well, that's like a big move. What was my target? 5,600 as the 161 extension. Why is that particularly notable? Well, because 16% has been the average for the last 1 year. And ironically, it's basically exactly at my target here. So if we rally by 16%, which has been the average over the last 10 times this has happened, it's time to go up. It's time to go up. It's time to go up. So we have our updated numbers from the weekend, and you can go back and watch that from the weekend as well. We talked about the year-to-date returns. We talked about the economic data coming out. So tomorrow, after hours, we're going to have Microsoft, AMD, Google. This will be the third most important data point for the week. The most important one's going to come on Wednesday when Jerome Powell decides with the FOMC, right? This is like, what do we call that? We called it the Justice League, where they're going to decide whether stocks go up or stocks go down. So here we go. Here's a nice headline from today. This is from January 28th, so it's actually from yesterday, updated today. Traders line up for once in a generation emerging markets bet. Once in a generation. Why would that happen? Well, maybe because these stocks have been in the dumps for so long. They're like, man, we just need a little bit of relief, Mr. Jerome. Please, can we get some sweet, sweet relief? Let me go here to, so we want regular. And if we have a look here, what does it mean? Man, nothing's happened for a long time here. This is emerging markets on average. Here we're talking about Latin America specifically, but we're talking about debt. But what this basically means is that they're betting that the Fed's going to be lowering rates. So let's just go through here and read. One of last year's big wagers in emerging markets, debt is getting fresh boost from bets the Federal Reserve will begin cutting interest rates. What does that mean? Hey, this is the Goldilocks part of the trade where we can go up, we can go up, we can go up. Maybe this time's different. We talked about that on the weekend too, where most declines happen after the pivot. The question is whether or not we're actually in a bear market, right? These bear markets, well, is this still a bear market? I don't know. But after the Fed pivots, again, a cut, which is what they're talking about in here, that's what we're looking for. So this time could definitely be different. Emerging markets have gone a whole bunch of nowhere. What's even stinkier? China. Oh, woof, right? Still down by 7% on the month or on the year. Breaking down. Oh my goodness. Emerging markets is like over here just going sideways. China's like, no, no, no. We're the best. We're going to do it first. We're going to do it better, sexier than anyone else. We go down faster. We go down harder. And we hit newer lows before anyone else. So did we actually make a new low here? 2087. Here we got 2086. We did. We made a multi-decade low. The last time we were at this level, it was 2008. China stinks. So what does that mean? America. America's the best. America's likely going to do good. And America has really strong growth. So if people are lining up for a once-in-a-generation trade, and the backdrop is that things look pretty good until we get a pattern break. Again, let's just think like Warren Buffett because he's an investor, and we're going to try to think like investors. That's why we're focusing on the monthly charts. Two more quick things as we're about to sign off here. I just want to have a look over at crypto because it's actually managed to go back to green in the month. So it looked way more terrible when it was a failed breakout. Well, now it's not a failed break. Now it actually looks decent. So what does that mean? Hey, it's still a failed break because we're below last month's high, which is at 45,000. But at least it's not red like the last two times this led to a massive sour reaction. So that one's really important. And then just the fact that the S&P has had to close over our previous all-time high at 480. So what does this mean? Well, it means that we don't fight the Fed. And this is what I've been talking about over and over. You're going to note that the notes on this chart are really simple. So what do we get first? We get a pause, which we now had for a number of months. Then we get the pivot. And then do we get the recession? Well, number 3 means we have to go through number 2 first. So let's take it one candle at a time, 1 month at a time. And for that reason, I'm going to ask you to go watch the weekend video now, queued up here on the left-hand side. If not, subscribe on the right-hand side and come see me at 9 a.m. tomorrow for our stream. I wish you all the best of luck. Thank you for tuning in.